All right, so we've seen multifamily deals in trouble, especially value add deals. Any value add deals that have been bought in the last couple of years, we're seeing some challenge in them. Well, why is that? It's important as an investor to know what the risks are, at least what you think the risks are, because some of the risks are unknowable, but knowing what those could be. And also, you don't want to wait too long because of inflation. Inflation is a killer of savers, of people that are saving money. So what do you need to know before you invest? Before you send those funds over, what are some things to consider? Well, I like to bring a little humor, and I want to ask you, what do you call an indecisive potato? You call them a hesitator, right? So I don't want you to be a hesitator. I want you to be a good potato. I want you to be someone who really makes the right decisions, feels good about what you do. We're going to go over in 3 easy steps. I've got a great quote for you at the end. Let's jump in and do this. All right, my name is Bronson Hill. I'm the CEO of Bronson Equity. We've raised $40 million for different retail investments such as multifamily car washes, oil and gas, ATMs, other types of investments we're super excited about. I'm not an investment advisor anymore. I'm not your investment advisor. This is just educational. These are just my thoughts. So the first thing to ask, first question when it comes to should you invest or should you not, is look at your risk tolerance. So I can say, what is my risk tolerance, right? Now as I mentioned, I was a registered investment advisor, which is known as an RIA. Well, I'm still an RIA, but instead of registered, I'm a recovering investment advisor. Why is that? It's because I realize Wall Street just doesn't have retail investors' best interests in mind typically. And a lot of times, they will look at people's risk tolerance. They'll say, okay, if somebody's 90 years old, maybe they shouldn't be in a startup venture because it could take 5-10 years and somebody could be dead before the thing even matures. So it's important to know what your risk tolerance is. Can you handle if an investment goes down by 30 or 50% and then it will come up later, or can you handle that kind of volatility? It's important to be able to know that. And again, how much do you allocate for real estate, or how much do you allocate for alternative investments in general? Some people would say 5%, some people say 95%, right? And no one really can answer that question but you, but it has to do with your ability to tolerate risk and also your age. If you're older, it's not as easy to tolerate risks or things going up and down or things like that. So also, what are your liquidity needs? If you're 95% invested or 100% invested, what happens? How do you live? How do you live off of, having invested everything, right? You can be so poor, but you're fully invested in all these things and you have to try to figure things out. So that's something to consider before you invest in anything, is just what is your investment parameters, what are your goals, and what's your risk tolerance. The second thing is what's the upside potential and the downside risk, right? So what if things go well, how is this going to go? And if things don't go well, how is it going to go? There's a book called The Dondo Investor by a guy named Manish Pabrai. It's a great book. He's also a disciple of Warren Buffett. And he talks about, this idea of heads I win and tails I don't lose much. And he just gives all kinds of examples of how this can take place. But again, that's a great equation. If heads I win and I can double my money, and if tails, if it doesn't go as well, I may just lose a little bit, but it would be kind of loss of time, or maybe I won't lose much. That's a great way to do it, right? Because then your downside is limited. Now, we do have some deals that we've done that have been more venture deals. We've got one in the energy space that's, if it goes well, it could be a 10x to 100x type of return. But I think there could be like a 40-50% chance that it goes to zero, right? And to be able to tolerate that type of risk, I'm willing to do, because it's still an asymmetric return. If someone with a net worth of 2 to 5 million or more has 4 or 5 of these deals going, and similar type of deals, and 4 of them go to zero, but one of them has a 10 to 100x return, well, it's actually worked out really well, right? So it's important to think about that, but that doesn't make sense unless somebody has a higher net worth. But look at the higher upside or the potential downside. Now, there's a really awesome book. I read a lot of books, but there's one. It's called Thinking Fast and Slow, and this guy Daniel Kahneman talks about the bias we have to be loss averse, right? So that we don't want to lose money, right? So if I did a coin flip and I said every time it goes heads, I'll give you $200, but every time it goes tails, you pay me $100, right? So it's a 2 to 1 that you're going to make money, but most people would say no to that because we're so loss averse. But statistically, if you just kept doing that again and again, you would become very, very wealthy, because it's 50-50 chance, but the plus side is twice as good as the negative. But we really overvalue losses in our minds, and it comes from just over time, the way we're running from a lion, or just these different things that we've had in our brain that cause us to look at investing a certain way. So, and a lot of times the risk that we are actually there, we don't see. You look at multifamily, no one really predicted that we're going to have the fastest rate of increases in interest rates over the last 40, 50 years, right? That's been really, really challenging. It's made some losses for investors. So now a lot of people are saying, hey, I don't want to get involved at all in stuff that looks anywhat similar. Yet it's probably much, much less risky now. And it's actually, there are some great opportunities coming available in real estate, multifamily, and other things like that. So it's important to look at the upside, downside, have some consideration of the risks as well as your profile. And the last thing is really inflation kills savers, right? Inflation will kill people that, it won't kill them physically, obviously, but for a hesitator, it will hurt them, because what happens is, costs, as you've seen, in the US, costs have increased by 40 to 50%. I have friends that live elsewhere in other places. They come back like, holy moly, what happened to everything? Just costs way more. The grocery store, the gas, the prices of services, everything. Well, you can see on this chart, they created over 40% new currency over a 2-year period. So yes, everything is going to cost more. So if you have 100K sitting in the bank and you've just done nothing with it, then you are you're gonna be penalized by that, right? It's gonna buy less stuff. The 100K will still be there. It just has less purchasing power. So don't wait too long. Should you invest? Obviously, that's a personal decision. How do you allocate? How do you walk through it? Make sure you understand the risks, the plus side, the downside. I have a system in my book, Fire Yourself, behind me here, that I just came out with, and it talks about how do you vet a deal, how do you walk through, kind of your own assessment of being able to figure out what you need, what your liquidity needs are, and how much cash flow do you need, that kind of thing. So summary is really understand what your goals are, understand the risks, and don't wait too long, because deals come and go, and it's important to just be in motion as you're doing this. Warren Buffett has a quote here. He says, opportunities come infrequently. When it rains gold, put out the bucket, not the thimble, right? So be ready when the opportunity is there. And when it is, just be willing to go and really go for it. So I like that he says that. And then I want to share this with you. This is about the investing rules that have changed over the last few years. I think that we're in a completely different environment than they were a few years ago. So you can check it out up here. Just give some different rules of investing that I think you'll find value in. And if you haven't joined Investor Club, you're not hearing about our great deals. We are doing things such as multifamily, oil and gas, ATM machines, car washes. We're also doing some other unique stuff in the development space and senior housing space that we're getting into. So you check that out at the link below, and we'll look forward to seeing you on the next video.